Well, Facebook's parent Meta disclosed its December quarter numbers, and that has left markets in jitters, especially in US and Europe. Markets have fallen sharply. And of course, that is across the board in technology, where we have seen a sell-off, largely due to Meta's earnings coming in below expectations. So the Dow fell almost 1.5% in trade on Thursday. The S&P 500 was down almost 2.5%, signaling the amount of technology weightage which is present in the S&P 500 as it registered its worst day in almost a year. The Nasdaq was the most impacted, of course, down over 3.5%, in fact 3.74% lower, clocking its worst day since September of 2020. Now, after market, some of those have recovered because Amazon's earnings came in and those were pretty much in line or slightly better. So that has kind of given investors a little bit of a boost to try and give them a realization that this particular earnings of Meta was only stock specific. And that has led markets slightly higher. When we look at the pre-market rates, as we see them, the Dow futures is up almost 0.5%, the S&P futures are up 1% almost, and the Nasdaq futures are up 1.75%. But the volatility in markets seem to continue, especially in US markets. Moving on to Europe, Europe too closed lower, largely on the tech sell-off in the US. That drove even European markets lower, with the DAX down over 1.5%, the FTSE down over 0.5%, and the Stock 600 also down almost 1.75 odd percent. So we saw a sell-off even in Europe, just like the one which we had seen in the US. Moving on to Asia, Asian markets have opened largely mixed. So when we look at the Nikkei, it's absolutely flat, in fact trading with a negative bias, 3 basis points lower. The Shanghai is down 1%. The Hang Seng is up over 2.5%. The ASX 200 too is absolutely flat, down around 7 basis points, and the Kospi is up 0.9%. So a completely mixed set of numbers coming out from Asia early today. Even in terms of the SGX Nifty, that's lower, or rather that's higher by 0.4% in early trade today. And that will signify how mixed the environment in Asian markets seems to be early today. The focus though will be on commodities, because oil has breached that critical $90 a barrel mark, and now a lot of analysts expect it to stop only at $100 a barrel. So that will continue to weigh in. That is largely demand driven. The demand surge has led to a rise in prices. Of course, geopolitical tensions in between Russia and Ukraine are not helping a very tight market that oil has become in recent weeks. There is also an announcement by OPEC Plus that there's going to be an increased production from March onwards, and that though has still not helped oil prices whatsoever. In terms of gold is stable. It's at the $1,806 odd dollars an ounce mark, and it remains quite stable in that sense. When we look at the dollar index, well, that's tanked quite a bit, so it's around that 95.2 mark, and surprisingly there. And when we look at the 10-year treasury yields and bonds, well, the 10-year treasuries are currently at 1.842%. That's the US 10-year treasuries are currently at 1.842%. So they've risen up well versus where they stood yesterday. Bitcoin is just above the $37,000 mark, really not able to breach that. It's quite flat at the moment since the last week or so. It's a roundup of how global markets are looking in early trade this Friday.